Trading Market Technicals Morning Call video for Thursday, November 14th. Markets did break out of consolidation. Dow Jones up 70, almost 71 points. Nasdaq up 45. S&P up 14 and a Russell up 10. Breaking out of its flag pattern, which we'll show you in the chart segment. Well, the markets did break out. One day doesn't make a trend, but if the short-term trend is obvious, which is up, we are now testing all-time highs. We are on uncharted territory, guys. E-minis right now in the pre-market session actually made, again, new all-time highs, 1785 and a quarter. That's the new high in the overnight. So where do we go from here? Well, the market continues to move higher. Basically on Janet Yellen, she's going to be speaking in front of the committee today, and she had made a few comments that we need to do whatever it takes to make the market, to have the economy keep chugging along. And then Bernanke made another comment stating, status quo where he is. So they continue to pump liquidity into the market, continue to increase this bubble that we're in. And everything else pointing, indicators and whatnot, all continue to say, well, we've got major issues, cracks in the wall. But if price does not move lower, everything else is secondary. Remember, price is what pays, and that is the bottom line. Okay, let's run into, show you a couple of indicators. Just want to let you know what we're looking at. We have, we're making all-time highs in the markets, and the New York Stock Exchange all-time highs, new lows, new highs are not. Again, major red flag. And this could change rather quickly, guys. Remember, markets are up. The euphoria of buying stocks. Retail inflows are tremendous. They're huge. They're the highest since 2008. Again, these are all signs saying that the markets are indeed move higher. But what happens is that you have a lot of other market participants that say, hey, 1775, 1780 is a high. I'm going to short the market with my stops just above 1780. So what happens is market rips through that area and all the stops get elected, and we indeed fuel the fire for more upside, and that's when the market continues to move higher. So that's what's happening here. So we continue to move higher until the shorts capitulate. We're going to continue to move higher, it looks like. So we have the new highs, new lows. So again, this is not what you want to see, obviously, if you're a bull. You want to see the indicator of new highs making new highs. So stocks are not making new highs. Indexes are. Okay, so let's take a look at the New York Stock Exchange new lows. New lows are creeping up. So, well, how can this be? Well, you have stocks that are making new lows, and there are a bunch of stocks that are not making new lows, which they should be making new lows. So this here is obviously a major red flag. If we should be making new lows, and the indicator for new highs should be making new highs, and we're not. So this is actually playing a tug of war. This is telling you the internals of the market saying that, hey, stocks are actually moving lower, not higher with the market. So again, big warning sign, something that you definitely should be keeping an eye on. Bullish percent SPX. We are not in the buy signal yet, but we are now trying to break through this buy signal. We'll probably get it today if we push higher. Again, we're up about 475 in the pre-market in the E-mini S&P overnight session. So this could easily go on a trigger, create that little whipsaw that we're looking for. But really, I think that if it does go on a buy signal, I think the next signal on the sell side would be a big sell signal, something like this, or something like this actually. But we're still on the buy. We're still on a sell signal, but barely. Okay. All right. Now let's take a look at copper. Copper really took it on the chin. And, there's a lot of market participants and technical analysts, if you will, saying, oh, copper, that doesn't matter anymore. It really isn't the sector that it once it was, the asset class, where it leads the market. I disagree. I really do think that. And sometimes, different sectors does decouple, if you will, from the relationship of another sector, and the perfect case is the dollar and equities. They decouple from each other. They're inversely correlated, and then they're together as one. So I think that this is something that is really interesting to me. And again, this is nothing that you're not looking to trade. If you're day trading, it's good to know, but not that it's going to be a factor in your trading plan. But for the longer term investor that likes to hold things for a year, 2 years, this is something that you really need to pay attention to. And we have our almighty silent leader, Palladium, broke out, failed breakout, is now breaking down. So I think that the metals are in trouble. Take a look at gold. I think gold is a short, a screaming short. But again, at these levels, you got to pick your spots. And I'm looking for the 13. Now I'm looking for more like a 13, 18. We're getting a 20 and 50 cross here. That we're probably going to cross to the downside. As you can see, the 8, which is a good momentum indicator on the moving average. 20 is kind of sideline, but starting to break down a little bit. But as you can see, we need a good relief rally. Nice, good bounce and fail. Maybe make a lower high from this high, as we make a lower high from this high, and then we dump. I think gold's going to dump in a big way. I think gold's in a bear market, and it's just a matter of time before it dumps, especially if the government continues to do what it does. Okay, so let's go into the chart segment. We have now met our second Fibonacci extension of 161.8%. We are there now. Now, again, remember, this is one day. This is the overnight session, so this could easily change by 9:30. But again, we've met it yesterday anyway. We've actually hit it to the penny, just about to the penny. If not, we breached it, but then we closed below it. So on a closing basis, let's see if we can close back above this. We are, again, on uncharted territory, guys. There's nothing above here. It's all blue sky. So if we start to rally, we continue to rally, you got to just go with the flow. I would love to see the market pull back 8 or 10%. But I don't think that's going to happen. You see the averages are all pointing higher. And again, even if we get a little bit of a pullback to the 50-day moving average, even to the 200, it's even at 1700, you're still in an uptrend. So I would not look to be fighting the market here short. Hedging, absolutely. I'm a big advocate for hedging. I love to hedge, especially if you're holding a bunch of stocks. And the hedges are made to be lost, right? So it's an insurance policy. You're going to lose money on that, but hopefully your longs will make money and outnumber overweigh the loss of the hedge. But anyway, okay, 1618. We're here. We're there. Where do we go? Everything's pointing higher, so any pullbacks will probably be bought into. But let me show you the levels that I'm looking at. This is on the shorter term now. Here's an hourly chart, but I want to show you the hourly I'm looking at for any type of pullback and see if we start to break down at these levels. And then here's a couple ways you could play it. Obviously, one, either buy the dip into these areas, or if we break one on a closing basis, you could start legging into a small short position. Close another, add to the short, close another, add to the short, and then the back test you would add a full position, and then hopefully look to ride it down to 1700 or so. But again, just an example. All right, so here's what I'm looking at. I got 1751 here is my first pullback. 1742 will be the second, and then this little low here at 1736. And if you open it up, you'll see these are important lows. We get right back in here, as you can see. These are areas that have actually held resistance, support. This 1752 was big. We did break down, went to the 1742. Again, resistance, support, now resistance, support. And then, of course, that little spike lower, that's going to be a new pivotal low, your local low of what we're looking for to see if this market can indeed break down lower. But again, these are the three levels of importance that I'm looking for if and when the market does pull back, okay? But again, don't fight the trend. I'd love to short stocks, but not in this market, especially if the government continues to keep pumping money in and has promo auctions every 2 days. It's just not worth it, For a day trade, absolutely. But the key thing is buying strong stocks, selling weak stocks. That's really the bottom line. I know it sounds very, very simple to do, but it really is if you just follow the rules. All right, USO. For a day trade, if you were looking for USO for a day trade, acted really well and then sold off towards the end of the day. Here's the level, guys, for a swing trade right here. It's 34.40, a break above and close. You probably look for the 200-day moving average. You got the 20, a little bit of resistance coming down. We did break that 200, but again, for a day trade, remember, this is a counter trend trade. The market is lower, and the trend is lower. So a lot of these pops up will get sold into. Remember that. 76.8% retracing comes in at the 32.88. And if we break this area, expect this area to at least come into this place here, come into play. And if you can see here, we have a lot of support in here. So this is why anywhere in here, really, the market should stabilize and at least give us a dead cat bounce. Gold basically just paused yesterday, not really too much of anything. But again, I'm looking for gold back into these areas, 128, 130, for a good shorting opportunity in gold. And we had the breakout in spiders yesterday, consolidating. I've been mentioning for the last week or so. Say, look, there's nothing wrong with this chart. It's actually bullish because of the fact we're holding at the upper end of the range. No, even this one down day yesterday, last Thursday, and when that was faltered on Friday and we reversed, that was a big sign that there are no sellers out there. There's no fear at all until there's some sort of a big catalyst for the market. I would look at the market continue to grind higher. Now, to me, I think it's ludicrous to say that October 7th all the way up and then we continue to move higher into the end of the year. But again, it's not what I think. It's what the markets are doing. So again, pay attention to the price action of the markets. And if the markets are moving higher, then you got to go with the flow if you're looking to make some money. But you can't, this is just a crazy market, and shorting this thing is, it'd be mad to be shorting this market. Okay, nice flag pattern here, broke out of the flag. Okay, here's the key thing. Does the market have legs to move higher? Obviously it does. But what are the key factors here? Technology, Russell, and the banks. Russell now, if the Russell can start making new highs again, and at least get to this point, is going to be your next target. That's going to add fuel to the fire for equities to move higher as well. So Russell, pay attention, because now we're starting to get some buy interest in the Russell. Risk on. Remember, risk on, risk off. Russell looking for market participants, investors, putting on a little bit more risk in their portfolio. When they buy Russell, they're adding risk, meaning that they feel comfortable with the market. Diamonds breaking out here as well. New all-time highs. We have new all-time highs in basically all the sectors. Transport's looking good as well. So we're starting to have all of the engines, all of the cylinders run at the same time. So remember, this is a good sign if the market wants to move higher. And here's the XLF. Now, if the XLF starts to break out, watch the banks here, because I think the banks are going to be a big play. Remember, rising interest rates are good for banks, all right? If they're slow, not going to really affect the equity markets. If they start really popping hard, then eventually it will take its toll, but we're way away from that. XLF, break out higher, then you'll see the banks follow too as well. Now, here's interesting here. You see Goldman. Goldman's one of the leaders of the banks here. Literally just holding here. We had a little flag. We held this huge move up on last Thursday. So this is a good sign. If JP Morgan starts to break out on a closing basis, you want to make sure that JP Morgan is breaking out on volume. And we've gotten volume higher the last couple of days, okay? So now if JP Morgan can break out and start to move higher, you're going to see the other banks follow suit as well. We just don't want to fail breakout and start to break back down again. So that's what we want to pay attention to, volume. Goldman Sachs really not doing too much. The pattern is still valid for upside, but it really has to start breaking out now. Otherwise, to me, it's going to fail. Watch this level here, this 164.30. Watch that level for a breakout, because again, if that does fail again, then I just think the markets, I think Goldman will start to roll back down again. But again, we need Goldman as one of the leaders in the bank sector to move higher. Now, Apple, I think Apple's going to break out or break down one way or the other. I mentioned that yesterday. It's been consolidated for now nearly almost 2 weeks, and this here is building energy. Look at the Bollinger Bands. You can see they're tightening. Don't know which way it's going to break out. Obviously, the path to least resistance is higher, right, making higher highs and higher lows, and now we're just kind of consolidating. So if I was a gambler man, I would say that Apple moves high, but who knows? Apple really isn't the stock that it was, so I mean we could easily see a breakdown in Apple. But again, if we're breaking down, logical spot's going to be this trend line, and then of course the 50-day moving average. Other than that, I'm just going to patiently watch. I like to see where Apple does break, and when it does break in that direction, that's going to be the trade for Apple. And IGN, as you can see, this is good. Technology within technology starting to break higher. Networking sector starting to break higher. Now we did have that breakout in the breakdown in the head and shoulders pattern was valid. Now we're still valid, but we start taking out the right shoulder, then this pattern will be negated. I wouldn't even want to see it get above the 50-day moving average. But good sign, again, if you're a bull and you want to see this market move, you want technology to move with it, along with the banks, transports, and the Russell. And as you can see here, the Q's still within its range, though, right? We're still in this range. But again, another good sign that we have now, in fact, rallied out of here. Rallied up into these highs. if we start to break out here, guys, that's going to be another good sign that the markets are indeed moving higher. Okay, guys, have a great day today. Be careful with this crazy market. You can see this market pull down. We move lower early in the morning and then just rally pretty much most of the day. And again, better than expected volume, but weak volume. And remember, a lot of the equities really have select a few have been moving based on catalyst, and the other stocks really aren't moving like I mentioned to you on the indicator. So just a quick heads up, be alert out there, and don't really have a bias here. Trade what the market gives you, and then if the market starts to turn, I would not be stubborn on your longs, because this market can really get bad quickly and ugly, and look. It would be so fast that you wouldn't even, you blink of an eye, the markets would be down 200 points, And again, not saying that that's going to happen, but it's just saying to be nimble. It's the most important advice I can give anybody, is be nimble in this market. All right, guys, have a great day. We'll speak to you tomorrow. Take care.